Hey, what's up, everybody? This is Ron Simplified Myers. I wanted to cover the article written above about Mr. Philip Mendel and kind of cover what actually took place, at least from the information that I have. I don't know him personally, but I can tell by just the information put in the article what actually took place. And as I said in the title, is he to blame for what's going on? Now, of course, he has to take some of the blame because the fact is that's why I always disclose that it is up to you to gather the information so that you can make the right decision for yourself. That's why I always say it ain't right, it ain't wrong, it's just my opinion, and for you to go out and get the information. So from that perspective, he does have to take some of the blame. But majority of the blame I'm putting on his representative, and the reason being because he didn't do the research. He was actually hoping, praying, believing that the agent was actually there to serve him and do what's best. So bottom line is he trusted the agent to do the right thing. So let me kind of cover a little bit about the beginning for those of you who maybe didn't read the article. I'll bring you a little bit up to date on it. But it says Philip Mendel has been paying $25 a month for 23 years for a $100,000 policy, but recently learned it would soon be worthless unless he bumps up his payments to $510. It's a case of not knowing what he was buying, one that has an important lesson for others. Philip Mendel prides himself on being the sort of guy who plans ahead, so he purchased a $100,000 life insurance policy in 1988 to cover any costs that would come up in the event of his untimely demise. I didn't want this to be something my wife would have to worry about, Mendel, 74 of Mission Viejo, told me. I wanted her to have something to be able to put me away. Now he and his wife are both worried. The insurer, Canseco Life Insurance Company, you can put in whatever company you want because they all work the same, has informed Mendel that to maintain his current level of coverage, his monthly premium would have to rise to $510 from $25. I told them they got to be kidding, he said. There's no way we could pay that much. How is it Mendel wants to know that after 23 years of making the same payment month after month with nearly $7,000 already invested in his life insurance policy, the insurer can suddenly slap him with an almost $2,000 rate increase. Turns out this isn't a rate increase at all. Okay. Now, real quick on that point, it wasn't an increase at all, so the article says. Remember, if you watched my videos on term insurance, I told you all life insurance is based on you're getting older every single year. Therefore, they're going to charge you more every single year to cover that risk. If you look inside of every policy, you will see every single year your premium is going up every single year, no matter what this article just said. What happens in a cash value policy is the company doesn't bill you for the increase. So if your premium covers it, you know, the money you pay covers what you should be paying, then you're okay. But if not, what they're going to do is take the money out of your cash accumulation and pay the additional premium. So it's not that your rate didn't go up, as the article just said. It did go up. They just didn't bill you. And that's the game that agents play. They try to tell you your rates aren't going up. Yes, they are. Remember what I said. All insurance is based that way. You're going to get older. The risk is higher. The insurance company is going to charge you a little bit more money every year to cover that risk. That's the way it works. The only way it's not working like that is when I told you about level term. And the reason is they've already figured it in. They did use annual renewable term, which means it's getting more expensive every single year, and they averaged it out, which is why your premium stayed the same and your rate stayed the same. But remember what I said. It did start off, and the way they figured out the rates was based on it getting more expensive every single year. So all life insurance works that way. If an agent ever tells you anything different, watch who you're doing business with. So anyway, the agent or the representative of their lead company, I guess it is, the parent company, made the comment. She says insurance is very complex, whether you're 83 or 33. And you need to fully understand what you're buying and how it works. Now, that's their justification, but for basically taking advantage of this young man, Mr. Mendel. Now, life insurance is not complicated at all. That's the reason I laugh when agents throw that out at people. And if it is that complicated, let's say it is complicated, then that even tells you even more why Mr. Mendel would have trusted the agent to do what's best. So the representative of the parent company has no grounds to stand on, because the bottom line is your agent took advantage of that consumer if life insurance is so complicated, because in fact it was complicated. So he trusted the agent to do what's best, and the agent didn't. So that handles kind of that particular comment. But anyway, the bottom line is life insurance is very, very simple. If you understand, if you watch my videos on term, that is the basis of all life insurance. All insurance, no matter what agents say, is term. It's pure insurance. You pay premium, you have protection. You don't pay premium, you don't have protection. Your car insurance works that way. Your health insurance works that way. All insurance works that way. It's very straightforward. It's very simple. I pay. If something happens, you pay. If nothing happens, oh well. But I was paying just in case something occurs. I wanted to make sure I was protected. That's insurance. Life insurance works the same way. Very simple concept. Now, what makes it complicated, as they call it, is once you add a savings cash accumulations to the program. Yes, that does make it complicated, because the fact is there's a lot of jargon and a lot of games that have to be played inside that policy so that the consumer doesn't actually know what's going on. Now, it's real simple. If you put the money inside the policy, and that's really the concept of buy term, invest in difference. If you want insurance, buy it in the purest form, which is term. Invest your money somewhere else, even if you put it under your mattress. That's the basis. Once you put it inside the policy, you have loaned your money to that bank. Well, not loan. You've given your money to that bank. They will loan it back to you. That's why you have to borrow it. What a concept. I mean, what a great banking concept. Think about that. You put money in a bank, and the bank tells you whenever you need this money, you can borrow it, but we're only going to charge you a low interest rate. How many of you would bank at that bank? Probably none of us. But you're doing it inside of your life insurance policy. The reason is because that agent, because it's so complicated, explained it in a way where it made sense to Mr. Mendel, and it makes sense to most people that own most particular programs. So you can tell I'm not fond of any kind of program that have a savings component to it. Now, there's a lot of people who will say, well, I'm wealthy. I own those particular programs with a savings component in it, and it works for me. That's a different video, and I will cover that too. I have a video on why the wealthy actually use cash value programs. Unless you happen to fit in that particular category, which 95% or above of America or any country doesn't fit that situation, which means 95% plus people should never have a program that has a cash accumulation to it. The wealthy use it for a different reason, and I'll explain that again in a different video. So unless you're in that wealthy category, that's not even a conversation. Your concept has to be buy term insurance, because it's dirt cheap. It has a reason and it has a use. Go back to my other videos on the history of insurance and explaining term, and you'll fully understand the whole concept of insurance. It's not a complex situation. But anyway, bottom line, I just wanted to cover that so that most of you understand. Yes, Mr. Mendel has to take some of the blame, because the fact is his job to do his own research. But he did trust the representative to do what's best. And their leader of one of their parent companies actually came out and said it's very, very complicated. So if it is, the agent's still the one at fault. So, but anyway, the concept buy term, invest in difference is all I'm going to recommend. If you're wealthy, it's a whole different ballgame. I hope you understand that. I hope that was very straightforward, very clear. This is Ron Simplified Meyer signing off as your partner in success and in life. And again, it's not right, it's not wrong, it's just my opinion. Talk to you on the next video. Take care. Bye-bye.